Hey, hello, hello. Welcome to this ninth episode of second of the year of 2026 of Chasing the Deal. We are going to analyze a property, an industrial property in Seattle on the West Coast. Yes. So this is a very interesting market because it's one of the markets with the best income per capita per person. So, but it's also I just I just want to say before all, it's also one of the market that is most impacted by the tariffs of the government. So we are trying to make a strategy to take advantage of this declining market and try to make some money on this market. Okay, so I'm gonna show you. Let me show you my CoStar software. For those of you who have not seen any other show until now, this is my software I use to analyze all the markets, all the commercial real estate markets all over the US. I can also analyze, as you can see, let me show you. Um, Let me show you. How can I show you? Okay, here there. Okay, here there is. Okay, so all these markets are markets all over the US, are commercial markets. Uh, as I specialize on industrial assets, I only use it for industrial and office properties. Sometimes multifamily because I also develop multifamily. But as you can see, you can use this software to get information, market information from office, industrial, retail, multifamily, student, even hospitality. So all these markets, all these points, all these blue points are all markets all over the US and some markets all over Canada. And I think it has also in the UK. So I can get information of all those commercial properties all over the US. So this time I'm gonna show you guys Seattle. Seattle, as I told you, this is a very interesting market for me because people think, uh, many investors think, I'm only going to purchase properties, commercial properties in states that are driving, that are well going markets like Texas maybe, or the south states of the US. But sometimes people think the West Coast, like California or maybe Seattle, are not as good markets as the south states for real estate, because many people are moving from the west to the south and they think these markets are not good for them. But just think about it. It's the same as in the stock markets. You buy when the markets are bad. As Warren Buffett, I think Warren Buffett has a phrase for this. It's let me remember. It's when everyone is has fear, you have to be greedy, because those are the times when you make money, because you buy cheap. That's the key on real estate investing. Okay, so that's where I think these markets like the West Coast are good markets for me. I don't uh, I don't only focus on the markets like Texas or those kind of markets, even if people think these are not good or maybe are overpricing markets. So here I here in the first screen in Coaster, you can see some kind of carry performance indicators for the markets, for all the markets. For example, the inventory. Here we can see we have 368 million square feet inventory. Okay, that means this is This is the amount of square foot we have on their we have looking for tenants here. Okay, and we see this arrow going up. That means the inventory went up from the last year. You can see 1.51% up from the last year. Under construction, we have 3.8 million square feet, going down almost half from the last year. That means many developers, usually developers stop building new space when the spaces oversupplied, so this is an indicator you have an oversupply, and we can confirm here in the vacancy rate, because when we start to see an oversupply market, we can see a vacancy rate going up. This is the amount of space that it's vacant. Okay, from this inventory, 9.5% of that space is vacant. Okay, let me see, absorption. We can see also absorption, negative absorption. That means from the space we have ready to lease it up, less the space we are already leased. We have more tenants going out than going in. That's what absorption means, that the net absorption means. Okay, so this is a declining, shows a declining market, or maybe it shows an oversupply in new constructions, because when the developers start building new space, they may be oversupplied, and that makes so much space. Even if the economy is growing, but you have many developers building new space, so that makes the net absorption goes negative. Okay, because you have oversupply. Okay, another indicator we have here, another key performance indicator, it's the market asking rent. Okay, this is a good thing, because if we have a rise in the rent, maybe things are not as bad as we thought initially, because last year we have 14.6 dollars per square feet, and then this year we are having a little bit 10 cents over that number, so 13 cents. So that is almost 1%. So we are having rents growing. So that's a good thing. Okay. And the market per square feet. This is usually I don't pay too much attention to this number, because some markets are full of old buildings. So old buildings sell for less amount, and some markets are full of new space. So I think Seattle, it's because they have an oversupply in recent years. I think in 2021, for all over 2023, they had a large amount of new construction. So this number may show new space. Okay, so this is the medium, the average of all the space that sold in the last year, and this is the price per square foot. It's $243 per square feet. And last, it's the market cap rate. So this means when the market cap rate goes up, that may means the market is not as good, because investors are willing to pay less for this same amount of cash flow for that property, because the risk is is higher. That may mean that the market is cooling down, or that may be that the Federal Reserve it's taking the rates up. So since the Federal Reserve moves the rates up, then all the real estate investment market, the cap rates have to go up because it competes for the investors. It competes with the bonds and other markets. So it goes in the same line as the Federal Reserve. So I know this is not the case because right now the Federal Reserve rates are going down. So this may mean that the market is cooling down. Okay, so we are having so the cap rate is going up. Okay, so here we have a special summary of the market and some other numbers like the vacancy. For the national, we also can compare the numbers for this market and the national market. As you can see, for example, the market asking rate is bigger here in the market than the national. Okay, so available square feet total months on the market 9.7. Usually we see 6 months on the market, but this is not very important. Well, it's more important to see the net absorption, but this is another number. You can see how many months on the market usually the commercial properties take to sell. It is in this market 10 months, and usually what I see in other markets it's 6 to 8 months. That's what I see. In very good markets, maybe five months. Inventory went up. Inventory square foot went up. Existing buildings. Okay, deliveries. Okay, we can see other key performance indicators. As you can see here, the vacancy is all-time up. It's 9.5% in the first quarter of 2026, which is all-time high. You can see all the range on other years. For example, in 2016, it was 3.4%, the vacancy. And in 2024, first quarter, it was 6.63%. Okay, net deliveries all-time down. Okay, 2016 all-time high. Okay, let's read something about the leasing. Availability for industrial space remains elevated at 12%. As the first quarter of 2026, this marks 2 years of double-digit availability rates. Spec development and space givebacks have combined to create a glut of supply in the market. Okay, this is important, guys. So what we can see here, it's many the negative absorption and many of these numbers that went up maybe because the spec development and space givebacks. So I wonder, maybe some of these companies, for example, here I read Ashley Furniture, it's a big one, that maybe 2 or 3 years ago, before the new administration, they lease a lot of space because the rules on the markets were other rules. But after the tariffs, the rules change. So after the tariffs, because we are on the West Coast, Seattle receives most of the trade from China, from Asia. So because of the tariffs hit Asia and most of it hit China, we can wonder that many of these big companies that leased space like 2 or 3 years ago, they were expecting no tariffs. They were expecting to import many assets to the US and then maybe store in those warehouses in Seattle, and then distribute all over the US, move all over the US, all those materials or products. Okay, so since the rules changed for the tariffs, they may not need all that space. Okay, because they list big boxes, big warehouses. I read here most of this in this market is for big players. It's not for small players. So most of these tenants of these warehouses are big companies like Ashley Furniture. So they list over 500,000 square feet warehouses in the case of uh, Ashley Furniture. So after the new government put the tariffs, they don't need the space anymore. Okay, so what these companies do, they already have the lease agreement in place. They have to pay the landlord, okay, because they have the contract already. But they don't need the space, because if they import all those products from China, they will pay more. They will not sell that product because they will pay a lot of tariffs. Okay, so what these companies do, they try to lease it up, all that space. It's called a sublease. So they call the landlord and they say, okay, I don't need this space anymore. I can we can negotiate, and you can let me to sublease all this space so I can recoup some of those expenses. So most of these landlords accept, or maybe since the beginning they lease, if they have a good real estate agent or a good consultant, since the beginning, since they lease and they grow the lease agreement, they grow those clauses in the contract that the landlord let them sublease that space. So that's what I think we can do here. We can look for companies that are struggling with the tariffs, that they lease maybe 2, 3, or 5 years ago. They lease a lot of space, and they have to recoup some of those expenses. And then what we do, because if we lease to a tenant similar to that big boxes, we will struggle too, because those tenants are struggling to sell those products. So what we need to do is we need to sublease. What I have a video in my YouTube channel about lease flipping. What is lease flipping? You got a lease, and then that lease, you sign a price per square feet, you sign a term on that lease. But most important, you get the permit from the landlord or from the lessor to sublease that lease. So for example, if you lease at, let's say, $12 per square feet, then you sublease at $16 per square feet, and then you make $4 per square feet profit. Okay, so what you have to do is you don't lease to the same kind of landlord, to the same kind of tenant, excuse me, that is subleasing that space. You lease to a smaller landlord. What kind of smaller, excuse me, not landlord, tenant, to a smaller tenant? What kind of smaller tenant? Okay, since we know, let me show you here, economy. Okay, since we know job growth, unemployment rate, median household income, since we know we are in one of the areas with the highest median household income, which is in the case of Seattle around 120K. This is the median. But remember, we have many jobs here for AI, for IT, for software development, even for companies like space companies like SpaceX, okay, or Blue Origin. Okay, so we have well-paid jobs. So all that people that work at that kind of jobs, they are looking for services. They are looking to build their houses, to house maintenance, to business services like cleaning, like many business services we can do in many healthcare businesses. We have to find a landlord, a tenant that can pay more dollars per square feet for that same space we are already leasing for those manufacturing or distribution companies like Ashley Furniture. Okay, so we lease the space from the companies that has problems with that space, and then we lease it back to smaller tenants. So we have to subdivide, not subdivide in the sense of doing filing plans with the city, but subdividing in putting smaller leases on that same lease. So that's what we call master lease agreement, because we have a master lease, and then we have several subleases. We can sublease to more tenants, but with more for more money. Okay, so let me show you some other numbers. Net absorption, we can see here, for example, the vacancy peak. This is also important because we don't want to invest in something and then the vacancy went up, okay, and the rents went down. So we're seeing here that at the middle of 2026 we have the peak on the vacancy, and then the vacancy goes down. Okay, same thing in the US. At least this is a forecast from CoStar, but I find the forecast from this company, from CoStar, since they have many data, the forecasts tend to be very accurate. Okay, so for example, net absorption, we start to see a positive net absorption in the fourth quarter in 2026. Okay, because right now we have a negative absorption. First quarter we also have a negative absorption. Okay, You see here, second quarter, third quarter, second quarter, we start to have a positive absorption. That means more tenants moving in than tenants moving out. Okay. Please see the activity, vacancy rates. Here you can also see the vacancies, because for example, you can see vacancies at almost 10% right now, but then you see the I don't see the overall availability. Okay, here we have the sublet share. Okay, we see from all this available space, the sublet share, the companies that are subleasing, it's around 17%. 17%, that's a high number. So that means from all the available space, 17% are companies that lease more the space than they needed. So that shows us a trend. It's very, I'm pretty sure that this is mostly because of the tariffs, that these companies were projecting to sell more products imported from other countries, and then since the tariffs went up, then they are changing the plans, and then they are trying to get some money from that space to recoup some money. Okay, so for example, vacancy, market asking rent, you can see the asking rent is going up. It's going up. Okay, so this is a good thing. We are not having a declining rent here. This is, I think, the only positive number here. Months on the market, almost 10 months on the market. Months to lease. This is important because this helps us analyze the cash flow we will need, because or we have to negotiate on the lease, because if we need according to this, we need almost eight months to lease that space. Okay, so if we need 8 months to lease, we have to negotiate something. So if we sign a lease or a sublease, maybe the lessor don't ask you for the first 6 or maybe 8 months of rent. Maybe you can push the rents, or maybe he can. I don't think he can give you 8 months, but maybe he can give you 3. Okay, so that is that way we don't need much money to wait until the space can be leased. Okay, daily asking rent. Okay, asking rent per square feet. This we can see. That's what I told you. For example, as you can see in logistics, we have an average. Let me see this number in the first quarter. We have an average right now in the first quarter of 2026 of almost $14 per square feet. Okay, in logistics. But if we go flex, that flex is kind of the space we are looking to lease to our new subtenants. because they need less space. These are service business. These are like construction business, like maintenance business, like service business, like cleaning businesses. These are local businesses, so they are willing to pay more per square feet. So, for example, in this example, the flex space, they are paying almost the double. They are paying $23 per square feet. Okay, so there are good chances we can lease something on the logistics sublease space, and then sublease to new tenants for maybe 20 $20 per square feet. Maybe it's a good number, and we can make some profit there. Construction starts. We see not many construction starts at the end of the last years, but deliveries. We are not seeing many other uh, developers supplying more space until 27. Okay, so this is good because they are um, they are not placing new space, so we are so rents are not going down, vacancy are not going up, because they are not placing new space. Okay, under construction, you can see developers, new projects start to drop. Okay, sale price, market cap rate, this is important. We see a steady cap rate here, around 6%. Okay, job growth steady around 1%. Right now, around 0%, but at the end of the year, around 1%. So that is good. And also, as I mentioned before, this is one of the markets with the highest wages. Okay, and we have the AI trend. So many of these companies like Amazon or Microsoft are creating many new jobs on the AI. So we can expect many people moving to Seattle, high paying jobs and demanding services. So, okay, we have the strategy now. So the strategy will be a sublease, will be lease flipping, as I told you, and I have a video in my YouTube channel. You can go find it at the Nearshoring team. But right now I'm gonna show you some. Let's gonna find some properties. Okay. Sale, no, leasing. We're going to search for leasing spaces. Okay, so in this CoStar, this is I think this is the best software for property analysis, or they call it property intelligence. And but we cannot only find market data. We can actually find properties for lease and also for sale. Even we can find owners of those properties, okay, or tenants. This is a very complete research software for those in the real estate industry, developers, real estate agents, real estate brokers, or maybe real estate investors. But this is not cheap. Let me see, for lease on Seattle, lease comps. Okay, for lease in Seattle, Washington. Okay, So here we have around 3,600 properties for lease. Oh, let me put industrial. So if we put industrial, we only have almost 900 properties, 873 properties. And we have more spaces than properties because some properties lease more spaces, are, as I mentioned, they subdivide the space. Okay, so that's why we have more spaces than properties. So we have some filters here. So we are looking for big space. We are looking for big space because first we have a filter here. Let me find it. To only find sublet space. Okay, so we are not looking for assignment, where maybe we are looking for assignment. What is an assignment? It's, for example, I mentioned Ashley Furniture. They have the whole leasing agreement, and they assign to you. Okay, so but or the sublet, what's the difference? The difference between assignment and sublet is in the sublet they keep the that agreement with the landlord, but then they write a new agreement, a new lease agreement to you. So, but remember, if you for example, in this case of Ashley Furniture, if they lease to you and you don't pay the rent, they usually have to pay the rent for the landlord because they are still responsible. So you have a sublease and your tenant don't pay the rent, you cannot say your landlord that you will not pay the rent because your tenant didn't pay the rent. Okay, so you have to pay the rent. You are still responsible. You have to keep that in mind. So we are looking only for sublet spaces. Let me find how many sublet we have. Yeah, so all of these are sublet. We have no assignments. Okay, so let me see. Under construction, property type. We are really checking industrial, but let me check again. Industrial for lease, property size. Okay, we don't want to deal with small spaces because we want to sublease to other tenants. So at least I'm gonna put 100K. Okay, so we are going to take a lease for 100K, and then we have we can sublease to maybe 3 or 5 tenants, 20K each one. Okay, so we have 48 properties here. Asking rent, services, building. If we want to filter up more, we can filter by the building. Maybe we only want, of course, all of them will be existing buildings because it's a sublease. But we are only looking for new buildings built, or let's put B, class B, and class A buildings. Most of those are new buildings. Okay, clear height. Okay, so this way we are focusing on companies that has more space that they want. So they will probably, if they sign the lease for maybe, let's say, $12 per square feet, because they leased 2 or 3 years ago when the rents were lower, they will probably lease for you at the same number, or maybe with a loss. Okay, because they are not in the business of leasing. They are not in the business of leasing. They are in the business of manufacturing, or maybe retail, or some other businesses. So that's what I filter up, only subleases. So if we are going to sublease, then we want to be close to where the people are. Okay. So I really don't know Seattle, but for example, we can see here, we don't want to be very at the outskirts of the city. Okay. So I think all these properties are good. For example, we have many properties here. We are close to a highway. So let's see in this area. For example, we have this bill 2017 available at 10 to 12 per square feet. Okay, 250K. Let me see. Okay, 220 available, 8 to 10 per square feet, built, almost the same number. We want to be close to an area where we have many people leasing space, because we can negotiate. If we only have one like this, we don't have that power of negotiation. Okay, so I think this area is good because we are close to the downtown, we are close to where the people live, so we may get a good rent from our tenants. Okay, so let's see, 160. Okay, okay, so let's choose almost the same amount of space. This is 251, 225, and 250. Okay, almost the same numbers. So let's select this one, let's select this one, and this last one. Okay, so we have 3 options to choose for a lease. We have the first option at the west, close to the highway number 5. The first option will be 6046 20th Street. Will be 251K square feet, and we have available 50 to 129K square feet. They are asking 9.24 per square feet. As I told you, this is a better price than the current market. The current market is 14 for logistics. So you can see here, we can get a better price here in a sublease. Then we have the second option. They have the full space available. they have 225K available at $8 to $10 per square feet. This is an estimate, probably from Costa. Okay. And last, we have the last option. We have the same amount of space available, 250, available at 10 to 12 per square feet. This is also an estimate. They don't list the number. Okay. So the only number we are sure is this, 9.25 per square feet. So this is the first option. I will let you to vote. Which one do you want me to analyze? We have these three options. First option will be 20th Street. We have 130 square feet available at 9.24 per square feet. Option number B, 26th Street, 225 square feet from $8 to $10 per square feet. And option 3, it's 250K available at 10 to 12 per square feet. Which one do you want me to analyze? I will let you vote for 1 minute, and then we will analyze the property. Which one is better investment? Okay. Option number 1, 20th Street for $9.24 per square feet. Option B, 26th Street at $8 to $10 per square feet, 225 square feet available. And last, 78th Avenue, 250K available at 10 to 12 per square feet. Which one do you want me to analyze? Let's vote, and I will analyze the property with more votes. Okay. I'm going to give you 1 minute. Okay. If you have some comment, you can write it on if you are watching me on LinkedIn or TikTok or YouTube. You can leave your comment and I will answer back all your comment, any question you have about even these markets or other markets you want to purchase a property in. I really like to answer all the questions. Also, if you want to subscribe to any of my channels, I'm in YouTube as Nearshoring Team. In LinkedIn, you can find me as Andres Vite. And in TikTok, I'm as Andres Vite CRE. So you can find me on those 3 social media. So option number 1, 20th Street, 50K to 130K available at 9.24 per square feet. Okay. Option B, 26th Street, available 225K available at 8 to 10 per square feet. And option C, 78th Avenue, 250K available at 10 to 12 per square feet. Okay, so time's up. So let's choose the 20th Street. 60, 6546 20th Street. So let's analyze this property. Okay. Okay, so I guess since I see some lease information here in CoStar, I guess the tenant is my depot dot inc. Let me see here. I don't think you can see my screen, but I'm gonna find the tenant so I can know more about the tenant. My depot, I call home decor, office furniture. It's an office furniture company. So remember, I told you about Ashley Furniture. So I guess many furniture companies are in Seattle and they are having a bad time with the tariffs. So they signed on September 2024, and they leased, I think, half of the building. Yeah, half of the building because they leased 122K square feet, and they have available 130K. Which, if you sum it up, it's the gross building area of the building. Okay, so CoStar. Okay, so I want to see the floor plans. Let me see the summary. Smallest space 50K. Smallest space 50K. They probably are leasing. They probably have two bays. Why I say this? Because if the smallest space is 50K and the max space is 129, when you lease some space, at least you give one door to the tenant because he has to have at least one entrance, you know. So I guess we can only lease to two tenants here. I haven't seen the floor space, but as I see this, the smaller space, it's 50K, and the max it's 130. I guess we can only lease to two tenants. Okay, because otherwise, if we choose to lease to three tenants and we have only two doors, we have to make an extra door. So we don't want to we don't want to pay for more doors, right? Because we already have the cost of the lease. You know, since we signed the lease, we have to pay the rent, and as we see in the market data, we have to wait at least, I think, 8 months. Okay, so 8 months of rents plus the cost of tenant improvements. We don't want to we want fast money, right? So the faster we can set up the space for multiple tenants, the better. Okay, I see it has 62 exterior. Okay, exterior docks, drive-ins, 4 total. Okay, this is a good thing for logistics spaces. Let me tell you something. Docks are the entrance for the big trucks. Logistics companies, most of them, they want high deck docks, okay, because they are logistics. They put the trailer and they load the trailer, and then the trailer goes to the retailer store or to other city. Okay, so they prefer docks. The thing is, the kind of tenants we are renting out, we are subleasing, they don't prefer docks because they are usually last mile retailers or service companies. Okay, so but here's the trick: you can convert a dock to a ramp, but you cannot always convert a ramp to a dock. Okay, because uh, because of this, we can take this space with docks and then just build a ramp. And building a ramp, it's cheap. It's not that expensive. Okay, so this is a good thing. 68, 62 exterior docks. Okay, let me find. Here we have you see, we have plenty of docks here. Plenty of it. This is we probably can lease to more than two tenants. Okay, but because they are leasing the lease, we can negotiate this always. Okay, the list they are leasing is 50k. We can lease 130k total. And I guess I have to see the floor plan. I will not show you here because I don't have time. But since we have 62 exterior docks and we are leasing half of the building, because remember, they have 122 leases already leased. Okay, so since we are leasing almost half of the building, we can have, let's say, 30 docks. That's a lot for 130k. So let's say at least I see we can lease to 5 tenants. Let me see. If we lease to 5 tenants and we have 30 docks, we have 6 docks per tenant. Okay, that's a lot. This is a good building. Okay, and then we end up with a let's say 6 tenants. 6 tenants, and then we have around 20k square feet. Okay, so if we get this list, I'm gonna show you fast numbers. We have here a triple net, because we can see here they have triple net. Okay, they have triple net lease, so that means they are paying for the property taxes, insurance, and maintenance. So most of this number for the landlord is profit, most of it. Okay, so if we rent for, they are asking 9.24. Okay, so let's say we offer 9 per square feet. The costs are estimated for this industrial market, it's 8 to 10. Okay, so let's say we end up negotiating 9 per square feet. Okay, So 9 per square feet, and then we lease it up to 6 tenants, 20,000 square feet each tenant, because we have many doors, and we can convert those docks to ramps, which is what we want, because those kind of tenants, they want ramps, not docks. Okay, let me see. Operating expenses. Okay, so I'm gonna make some fast number here. So since flex tenants are paying more for this, they will probably paying double. Okay, so if we negotiate 9 with the lessor, with this company, my depot, and then we lease it up for double, for $18 as a triple net lease, we then have $9 per square feet profit. Well, it's not profit. We have to subtract some expenses, but most of the operational expenses are paid by the landlord, because we are just transferring the triple net lease to our new are paid by the tenant. We are just transferring the triple net lease to the new tenants. Okay, so $9 profit by 129,000. We have 1 million. 1 million, 1 million and 1,161,000. Almost all of that profit just making this list flipping, just signing a lease with this company, my depot, that is in trouble, I guess, because all furniture companies in Seattle right now are in trouble. And then we sign up 6 new leases with 6 new tenants. Okay, maybe we have to wait 8 months to lease all the space, maybe more, but 8 months for this number will be around 70% of 2/3, yeah. But it's around $800,000 we have to have in our savings to pay those leases while we are waiting for to find the tenant. So this is not free. We have to have those some kind of money, some kind of funds, or if we can negotiate with this company, with the landlord, we may make some kind of negotiation. Maybe we pay after we find what I will propose to the lessor. It's the first 8 months I will pay from the 9 month. Okay, but I will not, for example, if they only have a little bit more than 1 year with this lease, so they probably have around 3 years. Okay, 3 years more on this lease, or maybe more, because they are a big company. Okay, so I can negotiate. I push all those first 8 rents and start paying in the 9 month. But maybe I cannot pay. I will not pay the in the 9 month. I have to pay 2 rents. the rent number 9 and the rent number 1, because I'm pushing all those rents. Since I have $9 on profit, maybe I could pay it, but I will negotiate to pay the first 8 months all over 2 years, starting at month number 9. Okay, so that way I would end up paying maybe $5 plus the rent I'm paying. You know what I mean? So that's kind of financing I can get with this. You can negotiate everything with the lessor. In this case, this is not the owner; it's a lessor. Okay, so this is how I will do an investment in Seattle right now. I will do a list flipping. I hope you like this video. Remember, you can follow me or subscribe to my channels like in YouTube. I'm a Nearshoring team. And you can add me on LinkedIn if you are watching me on LinkedIn, or you can find me as Andres Vite. And you can leave any comments if you have any questions, or maybe you have you maybe want to purchase any property all over the US. I can help you. I'm a real estate agent with EXP Commercial. I'm licensed here in Texas, in Dallas, Texas, but I can help you to purchase any property all over the US. Just get into my website. It's thenearshoringguy.com and fill the contact form, and I will be happy to help you. So I hope you like this live, and I hope I can see you on the next one in 15 days. See you.